Right now, across Britain, hundreds of thousands of homeowners are sitting on their hands, not because they don't want to move, not because they can't afford to move, but because they're terrified of what's coming. 1 in 5 UK homeowners have completely paused their plans to sell. Another 38% of prospective buyers are lying awake at night worrying they won't be able to afford stamp duty on their next home. The British housing market hasn't just slowed down, it's essentially frozen, and everyone's waiting for the same thing. November 26th, 2025. That's when Chancellor Rachel Reeves will stand up and deliver the autumn budget. That's when we'll finally know what new taxes, what new rules, what new costs are about to hit the property market. But here's what nobody's talking about. While everyone's focused on what might be announced in a few weeks, a much bigger transformation is already underway. And it's changing who owns Britain forever. Before we dive deeper, make sure you hit that like button and subscribe to Property Reporter so you never miss the latest UK property and housing news. We're tracking every development in this market, and trust me, you'll want to stay updated on what's coming next. So let's start with what already happened, because that's what's got everyone so spooked. Back in April 2025, stamp duty thresholds got slashed, absolutely hammered. If you're a first-time buyer, you now start paying stamp duty on any property over £300,000. That used to be £425,000. If you're a home mover, you're paying on anything over £125,000. That used to be £250,000. For the average buyer, that's an extra £2,500 straight out of their pocket. And if you remember March 2025, the panic was real. There were 177,000 property transactions that month. That's more than double the previous March. Everyone was racing to beat the deadline. Then April arrived. The higher thresholds kicked in, and the market didn't just slow down, it collapsed. Transactions dropped off a cliff. Buyer demand fell 8% compared to the previous year. But that April shock was just the beginning. Now the rumour mill is in absolute overdrive. Every week brings new speculation about what Rachel Reeves might announce on November 26th. And some of these rumours are genuinely terrifying if you own property. There's talk of replacing stamp duty altogether with an annual property tax on homes worth more than £500,000. Imagine that. Instead of paying once when you buy, you'd pay every single year just for owning your home. Then there's speculation about capital gains tax being applied to main homes above certain values. Currently, your primary residence is exempt from CGT when you sell. But rumours suggest properties worth more than £1.5 million could lose that protection. Landlords are hearing whispers about national insurance being charged on rental income. New council tax bans targeting expensive properties, particularly in London and the South East, spreading stamp duty payments over several years instead of one lump sum. And here's the thing, the Treasury keeps denying these rumours. They say nothing's been decided. They tell people not to make rash decisions based on speculation. But the damage is already done. Because in property, uncertainty is the real killer. When people don't know what's coming, they freeze. They wait. They hold off on the biggest financial decision of their lives. And that's exactly what's happening right now. While homeowners are frozen in fear, there's another group that's been moving fast. Landlords. And they're not just pausing, they're running for the exits. Last year, 19% of landlords sold properties. Only 8% bought new ones. Think about that ratio for a second. For every landlord buying, more than 2 are selling. In the first quarter of 2025, a staggering 15.6% of all properties listed for sale were ex-buy-to-lets. That's the highest rate in years. London's leading the charge. Nearly 1 in every 4 homes currently for sale in the capital used to be rental properties. So what's driving this mass exodus? The math simply doesn't work anymore. Mortgage rates have roughly doubled from their lows. Many landlords are seeing monthly payments that have tripled. Then came Section 24. the tax changes that stopped landlords from deducting mortgage interest from rental income before calculating tax. That alone wiped hundreds of pounds per month off profit margins. Stamp duty surcharge for additional properties jumped to 5% in April. Capital gains tax allowances got slashed, and CGT rates themselves are rising from April 2025, which pushed even more landlords to sell before the deadline hits. The autumn 2024 budget was the final straw for thousands of them. But there's something really interesting happening. Something that should concern every renter in Britain. Yes, small landlords are fleeing the market in droves, but corporate landlords, they're scaling up. Over 400,000 buy-to-let companies are now registered in the UK. That number has exploded by 332% since 2016. Last year alone, a record 61,517 new limited companies were set up to hold rental property. That's a 23% increase on what was already a record in 2023. Right now, 680,000 properties across England and Wales are held in corporate structures. And that number's growing by 70,000 to 100,000 every single year. Here's what's really happening. Your traditional landlord, the person with 1 or 2 flats, maybe a small portfolio, they're getting squeezed out by regulations and taxes. But big corporate players, they can absorb the costs. They have tax efficiency through corporate structures. They have economies of scale. They can weather short-term losses that would bankrupt individual landlords. So while the headlines scream about landlords leaving the market, the reality is more nuanced. Small landlords are exiting. Big corporate landlords are taking over. And if you think that doesn't matter, if you think a landlord's a landlord, let me tell you why you should care. Because we've seen this film before. After the 2008 financial crash in America, Wall Street firms swooped in and bought foreclosed homes by the thousand. Companies like Blackstone, Progress Residential, and Invitation Homes became major property owners almost overnight. And what happened to the tenants in those homes? Rent increases of 30 to 40% became common. Monthly junk fees appeared for things like administration, payment processing, and service charges. Repairs took forever because corporate landlords prioritised dividends over maintenance. Tenants had zero negotiating power. It was take it or leave it, because when one company owns the entire block, where else are you going to go? In some American cities today, 1 in 5 homes is owned by a corporate landlord. That's not a small business owner you can call when the boiler breaks. That's a faceless corporation where your home is line item number 4,387 in a spreadsheet. And that exact model is creeping into Britain right now. When housing stops being homes and becomes financial products, the people living in them stop being tenants and become revenue streams. Every corporate landlord has shareholders to answer to, and shareholders want one thing: maximum return on investment. Meanwhile, if you're actually trying to rent a home in Britain right now, you're experiencing a very different reality depending on where you live. Average UK rents jumped between 9% and 12% last year. Demand is absolutely ferocious. Each rental listing attracts an average of 10 applications. In some areas, it's more like 20 or 30. But here's where it gets strange. London rents actually fell by 2.8% over the past year. They've dropped back to May 2023 levels. Inner London saw rents decline 4.6%. So what's going on? Why are rents falling in the capital while skyrocketing everywhere else? Simple. Supply and demand actually working for once. London's got an oversupply of rental properties right now, particularly at the higher end. But step outside the capital, and it's a completely different story. The North East has seen rental prices surge by 11.9%, Yorkshire and Humber up 7.4%, North West up 6.9%. These aren't small increases. These are region-changing price shifts. And here's the real problem. When landlords sell their rental properties, who's buying them? 2 out of every 3 ex-rental homes are being bought by first-time buyers, not new landlords. Which means every sale removes a rental property from the market permanently. Rental housing supply is shrinking at exactly the moment demand is exploding. According to Oxford Economics, only 1 in 8 renters could actually afford to buy a home in the area where they currently live. So you've got millions of people who need to rent, fewer properties available to rent, and corporate landlords replacing individual ones. It's a perfect storm, and it's only getting worse. So back to November 26th, back to the budget that's got everyone paralysed. What's actually going to happen? Here's what we know. The government desperately needs to raise revenue. Public spending commitments are massive. The fiscal situation is tight. Property makes an easy target because wealth in bricks and mortar is visible. You can't hide a house offshore in the Cayman Islands. But Rachel Reeves is also trapped. Go too hard on property taxes and you risk tanking market confidence completely. You could trigger a cascade where even more landlords dump properties, rental supply collapses further, and rents spike higher. You could freeze the entire housing market for months, destroying transaction volumes and the stamp duty revenue that comes with them. You could hammer homeowners in London and the South East who are already stretched thin on affordability. But go too soft, and you don't raise the money you need. You face criticism for not taxing wealth properly. You miss your fiscal targets. It's a genuinely difficult position. History tells us that markets usually respond positively once clarity emerges. Even bad news is better than uncertainty. People can plan, they can make decisions, they can move forward. But that only works if the clarity isn't absolutely devastating. If the announced measures are too harsh, clarity won't help. It'll just confirm everyone's worst fears. But here's what bothers me. Everyone's obsessing over what gets announced on November 26th. The entire property market is holding its breath for one speech, one budget, one set of policies. And I get it. Those policies matter. They'll affect millions of people. They could cost or save individuals tens of thousands of pounds. But while we're all staring at the budget, mesmerised like rabbits in headlights, we're missing the bigger picture. This isn't really about one budget. It's about the direction Britain's been travelling for years. Home ownership in the UK peaked at over 70% in the early 2000s. Since then, it's been sliding backwards. Private renting has surged. More young adults are living with their parents than at any point in modern history. The average age of a first-time buyer keeps climbing. Property prices in relation to wages have become completely disconnected. We're watching Britain transform from a nation of homeowners back to something that looks remarkably like the 19th century. Back then, most land and property was owned by a tiny elite. Aristocrats, the crown, the church. Ordinary people rented. Full stop. Through the 20th century, that changed. The government built millions of homes. Wages rose faster than house prices. Home ownership soared from just 10% at the start of the century to over 70% by 2000. For one brief, shining moment, Britain was a nation where ordinary people could own their homes. But that peak is now reversing. Government house building collapsed. The private sector took over, and housing became financialised. Except this time, the tiny elite who own everything aren't aristocrats. They're pension funds, private equity firms, and corporate landlords. They're institutional investors who see British homes as assets in a global portfolio. 1 in 5 British homeowners are frozen right now, waiting to see what the Chancellor announces. Hundreds of thousands of people have put their lives on hold because they're scared of what's coming on November 26th. And those fears are completely justified. The changes could be significant, the costs could be substantial. But while everyone's focused on the budget, the real transformation keeps rolling forward. Small landlords are being replaced by corporate ones. Home ownership rates continue their long decline. An entire generation is being locked out of property ownership entirely. The rental sector is consolidating into fewer, bigger hands. Britain is becoming a nation of permanent renters, paying corporations for the basic human need of shelter? So yes, watch the budget on November 26th. Yes, pay attention to what Rachel Reeves announces. Those details matter. But don't lose sight of the bigger question, the question nobody in power seems willing to ask. In 10 years, will ordinary Britons own homes at all? Or will we have completed the circle back to the 19th century, where a tiny elite owns the land and everyone else pays rent forever? The budget might freeze the market for a few more weeks. These structural changes are reshaping Britain for decades, and the clock's already ticking.